We are going to talk about stablecoins. By way of introduction, my name is Frank. I lead fintech at BitGo. BitGo is a digital asset infrastructure provider as well as stablecoin issuer. In fact, we have 4 stablecoin issuers on stage today. I'm joined by Mark, Stephanie, and Scott. Why don't you guys introduce yourselves, tell us about what you do, where you work, and we'll take it from there.
Hey everyone, Mark Daly. I'm the Chief Business Officer at Zero Hash. So Zero Hash provides the regulatory and technical infrastructure to enable any financial platform to launch on-chain products. And we do this here today across payments, trading, tokenization for some of the largest platforms in the US, including Morgan Stanley, Interactive Brokers, Stripe, Gusto, WorldPay, and BlackRock and Franklin Templeton. I'll pass it along.
Hi, I'm Stephanie Chan. I am the Senior Business Project Management Analyst for the Wyoming Stable Token Commission. We have issued the world's first fully reserved fiat-backed stable token by a public entity. And I will give a quick disclaimer that these opinions are my own. I do not speak for the state, the commission, or the state legislature.
Hi, I'm Scott Bauguess. I oversee global regulatory affairs at Coinbase. I'll just clarify that we are not a stablecoin issuer, but we work with most. You're welcome.
Coinbase.
We do work with most stablecoin issuers, list and trade those as securities, or excuse me, stablecoins.
All right, let's dive right into that. Genius is coming fast. Either by the fall of this year or January of 2027. Scott, what are some of the elements of Genius that you feel are underappreciated or underreported? As our policy expert, would love to get your opinion.
Yeah, so just to kind of recap, in July, Genius passed. Rulemakings need to be done by the end of this year or the act goes effective. So the OCC in particular has issued an NPR, notice of public to the public on its proposed rules. They asked over 200 questions, and it goes in the nitty-gritty of many aspects of what an issuer will have to do, and many of the aspects of that are very bank-like. But a stablecoin is not a bank. You might consider it a narrow bank. It doesn't have credit intermediation. It's not fraction reserve lending. So one of the underappreciated parts of the process, notice and comment rulemaking, is to make sure you don't put onerous requirements that are not intended for stablecoins into those rules and regs. One of the big issues is rewards. Genius had a compromise whereby issuers cannot pay interest, but platforms like Coinbase, in order to promote them, could. That's being relitigated in Clarity, but the Genius is very clear to the OCC and the regulators that it was not for them to use their discretion in implementing that. And so one of the things that is maybe underappreciated is that in the actual NPR that OCC proposed, they do have conditions in there which very much look like that they're going beyond the statute. And so those are some of the issues that are currently being worked at. And there was over 22,000 comment responses that just came in last Friday. Not all of them are public, but there's a lot for the OCC to sort through.
So with regards to rewards, you're saying there's still a chance?
I think that with Clarity, a compromise has been reached, and we'll see what all the details are, but it would be unambiguously good for consumers if they would be able to share in the rewards, just like they do with credit cards and other types of financial activities.
So let's pivot away from Genius for a second. Steph, Wyoming has been at the forefront here issuing the Frontier Stable Token. Can you expand on why Wyoming decided to issue its own stable token? What's different about the model? What is it for? Why does it exist?
Yeah, so Wyoming's been on the forefront of digital asset regulation really since 2016. The state's enacted over 50 bills in the last decade, one of which was the Wyoming Stable Token Act. The main objective of that was revenue diversification. Wyoming is a very large oil and gas state. It is a finite resource, and for them, having a stable token is a way to have revenues and maintain the state for future generations. It is, in my perspective, a public goods project. One of the main remits that we have in our statute is that interest will go back to the school foundation program. So I like to say it's for the kids. And comparatively to some of the private issuers, we're a lot more transparent. Everything that we do is done in a public forum. The rules that we promulgate has public commentary periods, which allow the general public to chime in and kind of give us their opinion on what they think. We have a very interesting kind of remit where our token is for any lawful use. So some of the private issuers do have some regulations and stipulations about where and how you can use their stable token. For example, buying prescription medication or paying taxes. There are issuers that does not allow that, but for us, we can't contravene someone's constitutional rights. And so for us, it's any lawful use. And I think that kind of opens the door a lot for different industries in the world.
So you've mentioned transparency, the opening up for feedback. I note that the Wyoming Stable Token is not Genius compliant, and I think by design. What is the interaction going to be with Wyoming saying, hey, I'm not a PPSI or permitted payment stablecoin issuer according to Genius, but hey, I'm a state issuing my own stablecoin. Well, what's that interaction going to be in the future?
I think it's still to be said. Like there's a lot of moving pieces. Currently, yeah, it's my personal belief that we are not Genius compliant because we don't fit into the definition of a person under Genius. However, there's a lot of similarities between the freeze and seize capabilities, the attestations, the reserves that are backing the stable tokens are more or less the same. And so I think there is enough similarities that we're Genius-esque, but we don't necessarily have to comply, at least today, at where it stands.
And as a follow-up, there are many stablecoin issuers out there. We talk to a lot of projects who want to issue their own stablecoin. How is Wyoming going to encourage use or broader adoption of the Frontier stable token?
Yeah, so we've been having a lot of discussions with a lot of different states, a lot of other countries that are interested, a lot of government non-NGOs that are more willing to work with us because of the structure that we have. We're transparent. We don't charge fees for issuance or redemption, and so the interest earned again goes back to the school foundation fund, as opposed to going back to the pockets of VCs and shareholders. There are certain stablecoin issuers that have never been audited, and you don't really know where the tokens are going or what's backing them. And so I do think that we kind of provide a product that answers a lot of those questions and gives people more confidence in using our stable token as opposed to the existing ones.
All right, so Wyoming is issuing its stablecoin as a state. There are multiple regulatory paths one can take to issue a stablecoin, whether it be a state chartered trust, potentially a SPEDI, which is a Wyoming special purpose depository institution, an OCC chartered bank like we are. Mark, you guys are also regulated. Tell us about how you guys are approaching this, and what is your advice to how companies should think about which regulatory path to take as they think about stablecoin issuance?
Yeah, so Zero Hash is heavily regulated. We're money transmitter state by state. We're a bit license holder in New York. We're a state chartered trust in North Carolina. We've also applied for our OCC charter as well. And ultimately, on our side, as the issuer / the infrastructure layer, it's important for us to be as regulated as possible to also give our customers and partners the level of regulation that they require for their business. Like we work with major companies that are also federally regulated. They expect to see you on par with them. I think for a lot of the participants that you see in the marketplace today, the question isn't necessarily like what regulation should I have? It should be more along the lines of who should I partner with to bring these products to market? And that's ultimately what the conversations that I'm involved in more directly on a day-to-day basis is not necessarily about advising firms on how to get regulated to spend 18 months or 2 years, 3 years going to build this out. It's more about how can you partner now to go to market, to launch a product, to leverage a stack, and really have them in play within the next couple of months as opposed to getting bogged down in the regulatory status, which I feel as issuers, we're very comfortable to get in and do, but as customers and partners and folks you see in the market today, be it in payments and trading, that's not necessarily their wheelhouse to go and build on that. So much of my conversations are more focused on getting to market, launching products, doing that securely, and ultimately doing it there not just in the US, but globally as well, through our network of regulation around the world.
So touching on that build or partner sort of decision, I think you and I are both talking to a lot of banks who are trying to figure out stablecoins, whether to issue their own stablecoin, whether to accept a stablecoin, whether to engage in tokenized deposits or doing both. At the same time, I see banks have a lot of misconceptions about stablecoins, especially around things like deposit flight. For Mark, what do you think the banks are getting wrong about stablecoins?
I think, one, I have a lot of empathy for the banks, first of all. I mean, I think they look at this space and they think crypto, 2017, and everything else, and it all gets bundled into one. But fundamentally, I think a lot of these groups are wrong on this position. I think there's been a lot of contradictory information delivered into the market, fear over deposit flights, fear over customer losses, fear over crypto itself. And I think if you address each one of those, you can ultimately see that that's not necessarily true. We haven't seen massive deposit flights over the past number of years as USDC and USDT grew. I don't think that's going to be something that you're going to see going forward if you also have interest being paid on yield being paid on stablecoins. We're looking at a lot of the activity that you see in stablecoins today is non-US activity as well. So these are dollars entering the system. It's not necessarily dollars coming out. So when you think through sort of that metric of maybe those 3 points, one, are we looking at deposit flights? I think no. I think you're taking dollars from Bank A, holding that with Bank B, which is the issuer. I think those customers are actually seeing more and more non-US funds coming into the system and being put into treasury bills and money market funds, which is ultimately recirculating back into the system as well. I think one of the big points you see too then is that, is yield on stablecoins going to compete against banks as they are today? The average rate of yield that you'll see on deposit bank accounts today in the US is, anywhere between 0 and 1%. I think the average is like 0.39 or something like that. And your competition at that point in the market isn't, an issuer going and launching a yield product. It's every other fintech out there that is trying to capture those deposits and is offering a higher rate of yield than you are today. And so I think the third point then is ultimately they see this as a crypto contagion or contamination risk. A lot of the use cases that I'm involved in and that I work on day to day at Zero Hash is not with crypto companies. It's, infrastructure providers. It's also issuers. It's also payment companies, brokerage platforms, neobanks, remittance platforms. They're looking to enable these use cases to service their customers and partners. And so I don't necessarily see these two things sort of in line together. I think there's a broader market right now that's definitely moved in, especially to the stablecoin space, and has ultimately taken over on that.
And Scott and Stephanie, do you have any thoughts to share about what you think the banks are getting wrong?
Yeah, I think that when it comes down to tokenized deposits versus stable tokens, I think banks are missing the bigger question, which is, who is your customer base? What is the demographics? How many of your users are, of a certain age? Most Gen Z, millennials, Gen Alpha probably don't even have a bank account, probably never even step foot in a bank, right? And they are going to other fintechs for those. And I think a lot of people currently bank on mobile applications. And so it's like, what are you doing to address that market? And I think that if, tokenizations are great for banks that want to incorporate blockchain technologies into their existing infrastructure, but it doesn't change how the end user is engaging with the bank. It's still fiat in, fiat out. And I think that, exploring stable coins, having a model that incorporates both could potentially address some of the younger age users and maybe get them back into the more traditional finance realm.
Yeah, I think banks are going to have their stablecoin strategies. We've been through this rodeo before. 4 decades ago, money market funds were going to kill banks. Now there are over $6 or $7 trillion of government funds in the U.S., which are structured very similar to how a stablecoin would be structured. Banks all have their money market strategies. It didn't kill banks, just in case you missed that. And stablecoins aren't either. They're going to lean into them. Deposit tokens are not interoperable. They will never work the same way a stablecoin does. Stablecoins really are the payment future, the settlement future, the collateral future. And the banks that are going to be around 10 years from now are going to figure out how to adopt that in their strategy.
So we've talked a lot about the U.S. and the regulatory environment here. For you, Scott, globally, where do you see the most interesting movement in terms of opportunities for stablecoins, whether regulatory or otherwise?
Yeah, so clearly right now cross-border payments is the use case everybody's been talking about, and you don't need to talk about that anymore. But Where it's going to be the most impactful is intra-corporate transfers across borders as a settlement instrument, as collateral. As soon as you can move fiat digitally on-chain, you can start doing it 24/7. The biggest problem institutions have today is holidays and weekends. If you have a risk event, and they always happen on a weekend, how do you move money around? And right now you can't do that with the banking system. So that, I think, is going to be the big opportunity that we're going to see. And it's not going to be the consumers that get the high AUM or the velocity. I think it's going to be institutions.
What about this fragmentation of regulatory regime? So the US has Genius, and we have a couple of 3 or 4 letter regulators who have their opinion on how stablecoin should behave. Europe has MiCA. Is there a risk of fragmentation of stablecoin regimes? Are they going to work well together, or do you see that as a risk?
I think they'll be solved. There is some challenges today. MiCA didn't contemplate substituted compliance because no other regime existed, and clearly now that the Genius Act is out, Europe's going to have to figure out a way to recognize Genius Act stablecoins. There are technical issues about how they issued their regs that are going to have to be modified into MiCA 2. These things are imminently doable, but the one thing to recognize is now that the US has adopted Genius, that is a template for every other jurisdiction to also follow suit, whether it's the UK, APAC, elsewhere. And it's the international standard setting bodies or the regulators talk to each other and jurisdictions talk to each other, where that is going to be the conduit for making sure that we get regulatory harmonization globally.
So we heard a previous panel talk about cross-border payments, and it's a topic you can't escape if you're talking about stablecoins. For you, Mark, you see a ton of use cases in your seat. You probably have projects coming to you all the time. What are the more interesting use cases for stablecoins that have come across your plate?
Yeah, so we've over 100 platforms today that use Zero Hash as their core infrastructure provider, and that's across payments, trading, tokenization use cases. I think one of the more surprising products that we've launched recently that I find incredibly interesting is our account funding product. So this is a way for any broker-dealer platform, prediction market, any front-end application for customers to let these users fund their accounts with stablecoins or crypto. Predominantly, it's stablecoin activity that we see on these rails. And if any of you have used Calci or an Interactive Brokers customer and funded your account, you probably use this product today. But in our stablecoin momentum report back in January, we showed that there was a 4.5x increase in non-US customers. And when we look at these products in the market, we pulled some data recently. Average transaction size is north of $3,000 per transaction. You've got users porting onto these rails in the US as soon as the bank hours have closed, so weekends and evenings are a massive rail for this opportunity. And then for non-US customers, we're seeing even a higher rate of average deposits where customers in the UAE or Asia are funding with clip sizes of 10, 20, 100,000 per transaction. So we see a massive skew in terms of the type of profile of customers that are using these rails today. I think what's really interesting is the use case here is that they want to get funds from outside the US into these US platforms so they can trade US financial markets, which is, I think, a great use case ultimately to have in the market today. These are dollars flowing into the US financial ecosystem. For me, it was one of the more surprising ones where ultimately you're starting to see real action in the market where users actually want to use stablecoins because they're faster, they're 24/7, and ultimately can let these users trade these markets whenever they want.
So this concept of faster, cheaper, more accessible funding methods, payment rails, I think is well established. What's missing? What needs to be built or what needs to be done for us to get widespread adoption of stablecoins? Is it acceptance? Is it infrastructure? Is it both? Is it regulation? Open floor.
I think recognizing decentralized protocols as a settlement instrument is critical. This is, I think, the brilliant aspect of stablecoins is that anybody in this room can interact directly with me on a protocol. We can settle that in USDC or some other stablecoin, and I could trade an asset. And we need global regulators to recognize that individuals can self-custody and engage in those transactions, and that is going to be the catalyst for greater adoption of digital assets.
So something like Clipper, what was announced today in terms of interoperability, seamless interoperability between coins on chain. Steph, what about you?
I honestly think it's acceptance. I mean, I think the technology stack is there from an end user use case. There is a little bit of education that's still needed. There's, from coming from Wyoming, the state itself incredibly permissive in blockchain technology, but a lot of the constituents still have a lot of hesitation about actually using it. And so I think that, the more rails that we can turn on, the more we obfuscate some of the, scary blockchain technology, the easier it's going to be for like an everyday end user to actually adopt.
Yeah, I think, it's all about making it easier to move assets cross-chain, cross-instrument, and bringing that more into the front end user experience that you have today. I think those sort of products and use cases that we see in the market that are solving for those problems are ultimately where we see more and more utility, giving customers access to stablecoins and say, okay, pick your asset, pick your chain, go to market. I'm never sure if that's like the right move for. I think back, are my parents going to use this product? Probably not. We still struggle on cell phones at times. But I think if you start to take that away from the end customer, make it more back-end infrastructure and plumbing, you get a really interesting user experience that you can deliver. So more use cases like that are ultimately what I think we need in the market.
You've touched upon, I think, a theme that's been maturing over the last couple of years, which is abstracting away the complexity of digital assets or stablecoins from the end user, right? You might be a user of a stablecoin without even knowing it, and that seems to be the end state for getting widespread adoption, where stablecoins are there underneath the surface, and the UI UX layer has essentially made it invisible for the end user. What about acceptance, though? In order for a consumer to be able to make a payment on a stablecoin, there needs to be a merchant or a bank or a point of sale system or an institution on the other side that's willing to accept it. We see interesting concepts like stablecoin clearinghouses like Ubix show up to enable this. How do you think we solve this problem?
Well, I mean, it goes back to peer-to-peer. If you can self-custody this, you don't need a payment mechanism to do that. But at the same time, you think of like a Venmo or a Zelle, which is probably the least efficient way to transfer cash. Because it's all abstracted away from the user, they think it's brilliant. And if it's simple to use and it's easy and they can't see the risk on the back end or the complexity, it doesn't matter. So it's the same thing with stablecoins. If you're in the business and you're all teched up, all you want to do is talk about the technology and how cool it is, but nobody cares. They just want to know, will this thing work at the end of the day? And as soon as we stop talking about all the cool things about stablecoins, you just start using it, like that's when it's going to be adopted.
I think we're in a really unique position as the state of Wyoming. Something that we've been having discussions with is other state agencies about how we can incorporate stable tokens to make tax payments or your car payments or these types of things at a state level, and allowing the constituents to engage with the state to kind of have better rails. We had a county treasurer provide a testimony at one of our public commission meetings where he said that they collected millions of dollars in taxes. Constituents paid over $70,000 in fees. If that was on stable tokens, that is more money back into the constituents' pockets, and I think that has a real impact for everyday use. And so because we're a state agency ourselves, we are having a lot of those discussions about how do we integrate with, the titling aspect, and how do we integrate with, thinking about ways of maybe putting voting on chain, right? Like that's much further thinking down the road and connects with digital identity. But these are kind of avenues that we can tackle at the state level to help end users actually be able to use the technology.
Okay, so let me double click on that real quick before we get the mark. The idea of paying your taxes and maybe saving a little bit of money by paying your taxes in stable coins or paying your licensing fees.
Yes.
That means the consumer needs a wallet. Is the state of Wyoming going to issue wallets? How do you get people on chain?
That's a great question. I mean, we aren't building a wallet ourselves, right? We do believe that everyone should have their own opinions and choices when it comes down to wallets. And it's one of the many reasons why the stable token today is deployed on 8 different blockchains. It's because we want optionality. We want people to make those choices themselves. The the Wyoming Stable Token is not a currency. We cannot tell people that you have to use it, but we just want to offer it as another option for them to have a better, engagement with the state and with the blockchain technology.
Okay. Yeah, I think for like every payment company that's out there, it's too good of an opportunity to miss right now. And I talk to most of these guys, and they're all working on products to service, stablecoins as a rail as part of their business, and that could be from the card networks right on down to the PSPs to the banks that are also working with them. And you can, listen to the earnings calls that you probably heard over the past couple of weeks. Everyone's talking about stablecoins as part of their strategy into the next year and beyond that as well. So I think a lot of these problems that you're seeing right now in terms of acceptance and adoption, it's more of just a lead time as to these groups coming to market with products. But you're going to see that across the board from every single part of the value chain, especially in payments. And I'm sure Zero Hash would have lots of announcements in the next couple of weeks that might address that as well.
Yeah, the 2 to 3% interchange fees that credit cards charge in a restaurant, your margins are 3, 4, 5%. That's a huge part of potential profitability. So in terms of merchant acceptance, once they realize that they can save money this way, that's also going to drive adoption.
Well, in order for this vision to happen, I think everybody needs infrastructure. So good time for us to be selling infrastructure is what I'm taking away.
Right business.
In the last couple of minutes we have left, what excites each of you in this future of moving money on chain, stablecoins being the next rails of finance? What excites each of you individually?
I think of it as a coin. One side is digital fiat, and the other side are the RWAs. The last panel, I think, really excited me in terms of, tokenization of assets, tokenization of securities. Everything is going to change, and everything that we have in financial markets today is going to be on chain, and stablecoins is the other half of every single one of those equations. On-chain settlement, decentralized finance, self-custody. These are the things that are going to actually fuel all of the companies like Coinbase is having that ability.
Personally, aid distribution. I think that, there's a lot of places in the world, even within the US, that needs support, needs financial support, resources, supplies. And what we see today is a lot of those funds are making many jumps and losing money along the way before it reaches its final destination. And stable tokens and blockchain technology allows straight peer-to-peer transfers and allows the resources and supplies to reach where it needs to go faster, cheaper, all the reasons why blockchain's great. And it also provides a level of accountability and transparency for donations and aid. And I think that goes a long way in ensuring that, if I'm making a donation, it gets to where it needs to go.
Yeah, I think maybe just on some of the use cases I've seen more recently, definitely looking at programmability closer in terms of machine-to-machine payments, I think is something that is super early days just yet. And we kind of haven't scratched the surface.
Trying to avoid AI on this panel, but
I had to slip it in somewhere. But I think for me, that's the one that really is super interesting at this point in time. And we're working with a number of partners right now on how you can take that there to market. Ultimately, when you have agent-to-agent transactions, a lot of things change from like compliance responsibilities, transaction monitoring, and so how do you do that there securely and scale that in the US and globally? And so for me, that's like a really interesting project right now to work on to ultimately solve and bring to market. But I think ultimately, for all of us, we've been in this space for quite a while. It is incredibly refreshing to be in a market where you have every possible tailwind that you can think of, be it regulatory, be it technology, and to be operating in that. So that's ultimately what's truly exciting on my side.
excellent. Thank you, Mark, Stephanie, Scott. We are out of time, and thank you all for joining us.
Thank you.